Good morning, everybody. I'm here at Yonkers, New York. I'm waiting for my inspection to come for a new tenant. And you know I'm a freaking hustler and the definition of a successful hard-ass worker. So I got to make a video in between. Silicon Valley Bank is not getting a bailout. However, all depositors are being made whole. I called it a bailout in my titles, and people get all antsy, not even watching videos. So no, it's not a bailout of Silicon Valley Bank. However, it is a bailout of all of the depositors. Customers can be made whole, which is fantastic because approximately half of the 2,500 startups in the United States are banked by Silicon Valley Bank. Silicon Valley Bank was the bank for tech startups. Silicon Valley Bank was the bank for startups that didn't make money, pre-profitable startups. And between Wednesday and Friday, they had a run on the bank, approximately 25% of their assets, over $40 billion. And the people that got their money out, good, and the people that didn't get their money out, bad. The problem is, the people that didn't get their money out, these huge corporations need to do payroll. They need to pay mortgages. It's not just CEOs getting a shit ton of money, that too, but they actually have bills and expenses that trickle down in the economy. You think the economy is bad? Imagine all these people that would have had no work. They can't get paid. So Janet Yellen, who originally says, I'm not doing a bailout, gets together with Jerome Powell and gets together with the FDIC, and they're like, hey, let's make sure that everybody that needs money can get their money out on Monday. On top of that, they do the same thing for Signature Bank. On top of this, Silicon Valley Bank also has a UK chapter. The UK chapter is being bought by Hsbc for £1. The reason it's £1 is because there's inherent risk with this. Hsbc is literally stepping in as the government in the UK. Now, UK has a thriving, robust tech startup scene, venture capitalist company scene as well. Obviously not as big as the United States, but it's huge, right? UK is a superpower. They have a lot of smart people. They have a lot of technology companies. If a bank would not buy up Silicon Valley UK, that would be a huge problem on their economy. Also, mortgage payments would not get paid. Loans would not get paid. Most importantly, people would not get paid. And they would absolutely get shellacked. JP Morgan Chase and the federal government extend a $70 billion unsecured line to First Republic Bank. I was talking about them over the weekend. I wanted to short them. Lo and behold, as of making this video, they're down 60% pre-market. Will I still short them? I don't know. Let's see what ends up happening. But I wanted to get in before this 60% drop. Obviously, I didn't get in before the 60% drop. A lot of people are like, hey, Adam, why didn't somebody buy Silicon Valley Bank the same way HSBC bought the UK chapter? And it's only the UK chapter. I'll answer this. There's only really three banks. JP Morgan Chase, Citibank, and Bank of America. Those are the three big banks in the United States. Maybe there's like one or two other big ones, but those are the three main ones that can afford to buy Silicon Valley Bank. There is no need for them to buy Silicon Valley Bank because they're going to get it for free without any of the cons. Let me rephrase that. HSBC buys Silicon Valley Bank UK. There's a lot of pros. They get a lot of customers. However, there's a lot of cons that all of their liabilities go to HSBC. They have to cover all of the accounts. JP Morgan, Citibank, and Bank of America don't need to do that. The lion's share is going to JP Morgan, but Bank of America and Citi are getting a shit ton as well. All of these customers that are going to be leaving Silicon Valley Bank, where are they going to go? If they go to Chase, Bank of America, or Citibank, they're getting a free client with all the benefits of a bailout or buying Silicon Valley Bank with none of the risks. If they officially bought them, they would have inherent risk with the buy. But if they don't officially buy them, the government steps in to bail out all customers' deposits. Where are these people going to go? These people are not staying with Silicon Valley Bank that does not exist anymore. Silicon Valley Bank is now taken over by the FDIC. They're still going to end up going to JP Morgan, Bank of America, and Citibank. It's a freaking win-win solution. The most stable banks probably, and I don't know, I'm not going over their, balance sheets or anything like that, but probably the run to safety banks are JP Morgan, Bank of America, and Citibank. Consolidation of the banking system has been around forever in the United States. This is how it works. Big banks swallow up small banks. Was what's happening right now done on purpose? I'm not saying it is, but this shit does in fact happen. Big banks keep buying up small banks. This is exactly what happened in 2008. And there was a bunch of other banks that failed from 2008 till now. You just don't hear about it. Also, a lot of banks go out of business. Not a collapse, but they just go out of business. It happens. You have a bank that has 1 or 2 branches. All of a sudden, it's eaten up by a bank that has 10 branches. Then a bank that 20 branches, so on and so forth. I worked at 5 banks in my life. I know how this works. So that's your news right now with what's happening with banking system. First Republic Bank, keep an eye out on them because the market does not believe that they are sustainable. They believe that there's going to be a collapse. If it's an overreaction or not, I don't know. I got to follow it more closely, but I was praying to get in before this drop, and this drop happened, right? That was like my goal. I was saying it on my videos. What happens next, I don't know. I'm waiting to see what's going to happen tomorrow. CPI data. After tomorrow, PPI data. Consumer Price Index. Producer Price Index. Consumer Price Index is the inflation you pay as a consumer, you. Producer Price Index is wholesalers inflation, which is businesses, how much business inflation there is, which trickles down to consumer inflation. And now Biden is proposing a wage hike of 5+% for all federal employees. Not saying that's good or bad. I'm just giving you guys the data. We're in a shitstorm. If the inflation data comes in high, we are effed. Why? Federal Open Market Committee meets next week. Inflation's running high. Super red hot. And this bailout is going to make it even worse. And it sets such a precedent, and I'm not saying right or wrong, I'm just giving you guys the data, that you will get bailed out in the United States. There are no repercussions, and if you are a good businessman or a bad businessman at a certain level, right, the banking level, we're gonna get you back. Too big to fail. It's not just the big boys. Everyone's too big to fail, including the medium and smaller large banks. Federal Open Market Committee meets next week. I'm going to be filming that live as well. So make sure tomorrow, 7:30, 8 o'clock, live on my channel. After tomorrow, 7:30, 8 o'clock, live on my channel. Tonight, 10 o'clock, I'm going to have a live with my man Gabe. We're going to talk stocks and crypto, general market. Definitely check that out. And yeah, next week, the Federal Open Market Committee is between a rock and a hard place. They were supposed to be raising by 50, maybe even 75 basis points. But now, consensus is that it's going to be 25. What if they don't do anything? Now the market might rally right now. But how sustainable is this market rally? I have no freaking idea. If the rally goes up, right now, if the markets go up like 50% or something, I'm selling a shit ton of stocks because I don't think this is sustainable. Personal, not advice. Take it with a grain of salt. Figure this out yourself. I hope you guys enjoy this. Click the little notification bell. Have a great day. Keep it clean in between.